All right, everybody. So over the month of July, yeah, it's July 31st. Over the month of July, what we've done is we've focused on the decisions that you need to make as a small business owner and entrepreneur that obviously have impact in the here and now in the short term, but also things that we need to be identifying and acting on when the calendar year turns, when we get into second quarter of 2021. And are there things that we can do to not only help now, but also prepare us better for the future? A couple weeks ago, I want to say 3 weeks ago, we focused on managing capital and managing assets. And we had a conversation about real estate. We had a conversation about EIDL and how we could look at those two different sources of capital, different sources of assets, but really employ them or deploy them to be very helpful and be very focused on leveraging the future of our business. I want to say 2 weeks ago, we looked at inventory and we discussed what inventory would be. How, are we doing just in time? Have there been supply chain disruptions? And the answer is yes. To how our model looks, and again, something that we need to pay attention to in the here and now, because we have to produce and we have to get ready to ship for customers. But it also goes to focus on, well, how can we better manage those supply chain relationships to take advantage of efficiency, to take advantage of our profitability. And so we had two business owners on from that perspective as well to kind of go through the options that they have seen. Well, now we're going to wrap up this series, and we really want to focus on production and maximizing efficiency in the workplace. I think it's a different conversation about what we're dealing with right in the here and now and where we're trying to go for the future. One of the consistent themes that we've heard over the past month as we've gone through all these different subjects and topics has been, let's tread water until we get out of this COVID-19 pandemic. Maybe there's fewer competitors at that point in time, but we're positioned to take advantage. We're positioned to grab market share. We're positioned to grab additional sales. And if we can do that now, especially with productivity, especially with efficiency, we're hopefully positioning ourselves to be much more profitable, hopefully with lower cost, and really take advantage of some new pivots in the marketplace. So with that, I just wanted to introduce our speaker for today, our guest for today. Roger, I'll let you do that introduction. I know that we have a couple stories on this that we can go back and forth with, but I wanted you to be able to kick us off and get us started today.
Okay, great. Thanks, John. I appreciate that. I appreciate the introduction and the invitation. And so I've been at Columbus State for about 4 years now. Started out as an adjunct, and now I'm on a full-time basis. I had about 30 years in the industry. I have done a number of different things. I have been in corporate America. I've owned 3 different businesses in a number of different areas. I'm primarily a technology person, but had a lot of business experience in management, executive roles in IT, as well as manufacturing. My last foray was in manufacturing. We manufactured folding attic stairways in our headquarters facilities in Little Rock, Arkansas. And then we manufactured decorative windows in our facility in Lumberton, North Carolina. And so just so that you know, I had never seen a folding attic stairway until I went to the facility I was supposed to start running. So just, I did a lot of reading, and if you're in manufacturing, if you have not read the book, The Goal, I highly, highly, highly recommend it. So at any rate, that was, that's just kind of, a number of things in which I've done. But I want to jump into this and just start off with, kind of a story, just to understand, part of my background in IT is disaster recovery. I was with a software disaster recovery company for a number of years. And the way that we define disaster recovery was an interruption of your business operations, right? It could be anything. And I think that what we're experiencing now, certainly we've never experienced anything like this, but I think that most companies would agree that we're experiencing a disruption in our business. Now that disruption could be certainly a significant loss in sales, but also a significant increase in sales, which has a whole different set of issues in which you have to deal with. So let me share with you when I was hired on to run this manufacturing company. This was in 2007, and I'm not sure how many of you remember the housing market back in actually it started probably about 2005 or so. And so during that time period, 2005 to 2010, the entire market shrunk about 43%. So unbeknownst to me at the time, right, instead of running away from the Titanic, I was there jumping on it and just trying to understand, how do we survive? What do we do? How do we respond? What should we do? Right? Because things weren't necessarily looking good for us. And so in the attic stairway business, about 70% of our business was from new builds, new home builds. And again, 43% contraction of the market. 30% was in retail, really from individuals kind of remodeling their homes. One of the things that I understood about business that was very, very important, that was described to me, that there are only 6 ways to really make money in business. Right? And so that, that just kind of, percolated to the top of my brain. And as you think about it, there's 3 ways on the income statement. You can increase your price, you can decrease your cost of goods sold, and hold on, I'm sorry, this thing keeps trying to log me off. Or you can reduce your SG&A expenses, or certainly a combination of all 3. What many business owners forget about or don't think about are the 3 on the balance sheet side. So one, you can, from an accounts receivable perspective, you can collect faster. And during your negotiations, you never want to offer trade discounts. So at least you want to start there. You want to pay later with permission, right? So you negotiate that instead of it being 30 days, can we extend, can we have our terms be 60 days? And then lastly, you turn your inventory faster. And so as I came into this company, the first thing that I needed to do was to kind of do a financial analysis and assessment of the company and their financials. Because what that allowed me to do was to really look at, where were we not competitive? I always look at ratios, and then I compare them to the industry. And then you start looking at, where are my low-hanging fruit? Man, if I can do better here. So for example, if my gross margins are 15% and the industry average is 20%, man, I've got some opportunities there. And then understanding the levers, right, that you have to pull, right, either price, cost of goods sold, labor costs, you have an opportunity to maybe change some things. But I guess the low-hanging fruit that I chose, what really jumped out at me was that our returns, as I looked at our financials, our returns were about 5%. We were about a $7 million company at that time. And 5% returns, that was costing us about $350,000 a year. Just to give you an understanding of how our operation was, our process, we had one employee that was handwriting labels, the labels that went onto the boxes that were shipped out. We had, we had two employees that were handwriting labels. We had one employee that was handwriting the work orders. We had one person entering the information into the computer system once we received the order. We had one person entering in the ship to, actually the order all over again, the ship to information into the computer system that was out in the warehouse, either UPS, FedEx, LTL carrier, what have you. And then, when we shipped those products out, every return, we had to bear the total cost. And at some point, we got smart and said, hey, don't even return the products once we start understanding our costs associated with it. But then we had to remanufacture the spares. We had to ship them. And that was an additional $245,000. So it was easy to start seeing how, wait a minute, this doesn't make financial sense. So one of the first things I did, and again, as a result of my IT background, this is just kind of how I think. So I went out and I hired a programmer who was familiar with Microsoft Great Plains, which was our accounting system. And again, which was very easy for them to do. So every time we entered an order, on the order, it printed out a barcode. I bought 3 scanners and a label printer. So now as the order moved through the production facility, all they had to do was scan the barcode. No one had to re-enter information. And so it was only entered one time. And so if you're following this story, you can probably see what the issues may have been in terms of return. Had nothing to do with the product. People were writing the information and they were writing it incorrectly, right? So they're writing it incorrectly. Then they're dependent upon their handwriting. Some people put the customer's purchase order number on it. Some people didn't. They would get it wrong in the UPS system. And so it was a multitude of these types of things simply because we were handwriting the labels. So
can I ask a quick question for this?
Sure, absolutely.
So you identified this as low-hanging fruit, right?
Yes.
Something that you could come in and identify right away, whether it was through the financial statements or it actually sounds like just watching operations and seeing how things were repeated over and over and over again, and sometimes incorrectly. Is that right?
Oh, well, that is even easier. So what happened was once I did the financial analysis, I could see returns was an issue. So then I needed to start following that process to see exactly what the process was. And so that's what it was, right? That, the packages would be out in La La Land somewhere. And then customers would say, hey, we've got these products, but they don't associate to any type of purchase order. So it was that type of feedback. I needed to understand what the process looked ugly.
So let's spin this forward to other small businesses, and I want to keep this out of the COVID conversation for right now. Do you think that a lot of small businesses or a lot of entrepreneurs fall into that same trap when it comes to productivity? Because what you identified is not what I think a lot of small business owners or people in operations would identify as being the major problems of productivity.
Well, see, John, that's the thing. No one thought this was a major issue. And, once, I looked at it, not that it was a major issue, but it actually was a major issue for us. And that's why I say when I did that assessment, things started jumping out. That wasn't the only one, but once I looked at it, I knew that it was something that we could probably fix in a very, very short time. And once we did this, we had less than a 1 month ROI, less than a 1 month. It freed up bottlenecks, which increased our capacity within the facility. We stopped getting complaints from customers, and we were starting to be able to meet our KPIs. And so those were the, and so, from a small business area, don't think that those things don't have a significant effect on you. Plus, I was thinking as well, John, we're going to come out of this thing. And since this is a downturn, now it's time to start fixing things and position the company to be able to scale. So when we just look at that particular issue, so we repurposed 3 employees, and we did not have to hire another employee in that circle of operations, even though we grew 3x. So that's how we were able to position ourselves to scale with one, that's just one example.
So what other low-hanging fruit do you think small businesses should be paying attention to?
Day sales outstanding. They're negotiating. So for example, negotiating trade discounts. And that's one. And if small businesses don't understand how those discounts affect their cash flow, they need to really look at it. So, for example, when we were dealing with Home Depot and Lowe's, right? The next year they wanted to, of course, get a better price. So I knew that we could afford that if they allowed me to negotiate for them to prepay for our products, for our shipments. So instead of having a 2% 10 net 30, right, we could afford to lower our price about 5% if they would prepay for the orders. Now they didn't do that, but what they did do is say, hey, Roger, I'll tell you what, we'll pay you in 10 days. I said, you got a deal. Right. So when you look at the number, you said, wow, we just increased our gross margins by about 30%, and we had to raise our price. We had to lower our price by 5%. So understanding those things are, again, the type of low-hanging fruit that you can do. And we always played the small business thing. We're a small business. We can't compete like those other. I'll tell you, what about, let's negotiate on the terms. And if you're dealing with purchasing people, they don't always know the effects that has on the transaction. So
there's a couple things that you mentioned that I wanted to come back to. The first being everything has to come back to the financial statements, right?
Yeah.
If we make decisions and don't understand the ramifications of how this either increases cash flow or we get that cash flow sooner, or how it either increases or decreases costs. Yeah, it's we could have the greatest idea in the world, but it has to show that work on the back end to make sure it's a valid idea and a valid way to increase productivity. I do also want to have a conversation about what does this look like in a manufacturing setting, and what does it look like in a service setting. And maybe this is a good time to bring it into current day and look at the different examples that exist out there for whether it's manufacturing products or performing services. Do you see any similarities between those two tracks, service or products, when it comes to productivity?
Well, I think that, from a manufacturing standpoint, depending upon the situation, I think that carrying inventory, I would say, would be the biggest difference. So, for example, I had a computer company, and inventory turns didn't necessarily affect us because we held very little inventory. But those other pieces to the puzzle, really, did affect us in terms of, receivables, collectibles, payables, those types of things, really kind of, go across the board. I think that once you kind of understand those underlying principles, you can really apply them to really any kind of business. But from a manufacturing standpoint, there's a lot of other types of things you got to think about. You have to think about your capacity. You have to think about inventory management. You have to think about your distribution system. That supply chain, incoming and outgoing. How do you time those things up? And so we went through all of those things, which was really not like we did on the service end. But I think that, kind of the similarity that is there is that I think that you have to sometimes think outside the box in terms of the value that you can provide a particular potential customer. So as an example, we had to, when we won, we actually won Lowe's, Home Depot, and Menards. But when we went into the situation, right, folding attic stairways are a commodity product, right? So it was good that, right, we're selling a commodity. There's very little difference in speeds and feeds. And the thing that the customer is looking for in a lot of those cases, you really have no leverage. You're looking at price. But what we did was we started looking at annual reports, understanding what the initiatives of Lowe's was for that particular year, and then trying to understand how partnering with us, we could help them to accomplish those goals. So for example, during that time, they were trying to reduce store space without inventory stockouts, right? And so we understood that. So when we came in to do our presentation was not on speeds and fees like all of our other competitors were. Ours was, hey, let us help you to understand. Number one, we understand what your initiatives are. Let us help you to understand how we can help you to meet those initiatives and exactly how we can do to, how our process allows us to do that. And many of those folks in the room said we had never heard anything like this, but they were interested. They gave us a shot, and we actually did exactly what we said we could do. So it was a different approach. And again, from a service or product standpoint, I think that those are keys.
So in that case, were your KPIs much different than if you would have approached Home Depot or Lowe's 5 years earlier?
Well, it would have been dependent upon them, John, what their KPIs were, because one of the things that we did was we created our KPIs based upon theirs, right? So once I took a look at the financial statements, I could tell them as a company, you have 4 inventory turns a year. I said, I made some assumptions, but here are the numbers and you can change them if you want. I said, by partnering with us, I can assure you 10 turns. And that's something you as a purchasing person can now take to upper management. And so if it were something else, we would have been focusing on what they were interested in.
Okay, so let's spin this forward to a conversation about people, right? Employees. So when you said that you can alter or change or reweight the KPIs that you're paying attention to, how does that message get transferred from Roger down to the people that Roger employs?
Yeah, that's a great point. And that was a cultural change that needed to happen. Because one of the things that I believed in was having a weekly meeting with everyone that reported to me. We discussed what it was that we wanted to do and how that message needed to be pushed down. And so anytime we did something, that was different, I'd bring everybody together. Usually it was around, we'd have lunch or something together, and people were full, and then they weren't so apt to argue. But um, you know, I help explain to them that everyone has a role. Everyone has a part in helping the company to be successful. And if the company is successful, we all are successful. So what we would do is we would create these, the goals for the day. We would post them. I would ask the managers to have a meeting with the folks the first 5 or 10 minutes of the shift and say, hey guys, here's our goal. Here are the total number of units we have to get out of the facility today. Now, then we break it down in each department. Here's your goal. This is what you have to do to, in order for us to be successful. Everybody has to do their job. And so we had the big board, and then we had boards in various departments in terms of what we had to do. And so I would walk around all the time, and they'd know one of the questions I'd ask, what's our bogey for today, right? And they would be proud to tell us, wait, listen, and it's only 10 o'clock and we're at about 40% of our number. So it became a challenge. We'd have, celebrations, lunches. You'd have different departments arguing about, they're slowing us down. We could do more if they pick it up. And certainly I would come and kind of needle the department, say, hey, that department said you're slowing them down. So again, we made it fun. I think, and we always wanted to communicate. And then we communicated how we did against the, our numbers. And so, we ended up having to buy another facility. So it became obvious that we were doing the types of things that we needed to do. And so that was great. And then one of the things that we would do and share with the entire company is that each month, what we would do is we'd send our customers our performance report. Here's what our KPIs are, and this is how we perform. And if we were below by more than 2%, we had to have an explanation as to why we underperformed. So, I mean, it became a kind of a family environment, and we grew from about 40 people to over, well, both facilities. We ended up at the main facility, about 200 people. So it was a situation. And then as people came in, they were kind of getting acclimated to the culture, and not, it was a serious thing, but we were very lighthearted about a lot of different things.
So I know we have a couple other people on the phone call or on the conference today, and this doesn't just have to be a conversation between Roger and myself. So if you do have a question and want to voice that, please do type it into the chat, and we'll make sure that we get to it as well. Now, I do have to ask a question, Roger. So
Sure.
that was in what you just talked about, buying another facility, team meals, and all these types of things. Is not in the current situation where we are now, where people have to distance themselves. Productivity probably is not, when you look at a KPI, is probably not as high as it was even a year ago. So what things should we be considering? And again, it doesn't have to be, manufacturing or service, either one. Well, what are some of the things that small businesses should be considering when looking at those KPIs when it comes to performance or productivity now?
Yeah, I would, as I think about this and I think about, our company, right? I think that the most important thing is to be in communication with your customers, talking to your customers about, the exact, the situation as it exists. Can they live with uh, 2 additional days or 5 additional days of not receiving, their product? They're supposed to get their products after their order within 15 days. We may have to do it, 20 days. The kind of the consistent thing about the situation that we're in now is that it affects everyone. So no one is exempted, and everyone understands. But I think that you have to be realistic with your team. What can we do? How can we consistently perform? At what level? And then you have to communicate, with your customer, so everyone has the same expectations, and then you don't get hit with a situation where someone comes back and says, well, wait a minute, you guys didn't deliver. So that's one of the things that I think is very, very important.
So do you still put the same amount of emphasis on profitability now that you would have a year ago?
Well, I think that I would be realistic, John, and say that that's probably not going to happen. I think that even if, and I kind of say this with caution, that companies that are experiencing significant growth right now are probably, and again, depending upon the company, they are need to be cautious. So don't be so quick to say, hey, I wish I was such and such. I wish I was such and such. Certain growth happens in spite of yourself. And when you experience that type of growth, like a number of companies are, there's a couple things that are going to happen. It's going to come back to you. So do you know how to scale your business? Do you know how to contract your business in a controlled manner that allows you to still have viability? Those companies that are, it's hitting you right now, and you're kind of suffering, but you're doing okay. Now is the time to invest, right? Now is the time to invest in your operations, your efficiency. And John, if you would allow me, if I could just kind of throw this out, we did a lot of that, but I'll tell you, we were helped by the Chamber of Commerce down in Arkansas. They knew about programs that existed from the state, the county, and the federal government. They were able to get us matching grants. So projects that we wanted to do to become much more efficient, they were at 50% match grant. And I think that we had 3 different rounds of about $200,000 each. So they would match up to $200,000 a year. I mean, that just significantly helped us, where we could bring in experts. And I'm just thinking about how we repurposed and redid our manufacturing processes in order to facilitate the change that was going on in the market. So I'm sorry.
Is that a parallel to an EIDL loan at this point in time? I mean, you talked about grants. Would an EIDL be a parallel conversation to what you just said?
Now, what's an EIDL, John? Tell me.
So that's the Economic Injury Disaster Loan.
Oh, okay.
And so, I mean, just to talk of, let's just say $125,000 loan at, 2.5, 3% interest over 30 years. It's not a grant, right? I mean, at least it's not a grant yet. So is that a parallel conversation to what you experienced?
Well, not it is and it isn't, because simply because I say that because the chamber was great, and I don't say that because I was on the board of the chamber, but it was the fact that they were aggressive and they sought out different programs and they brought them to us. Said, Roger, I think you guys can benefit from this. I think you guys can benefit from this. And again, those were all grants. We didn't even. I mean, they weren't loans, right? And certainly we would have had the finances to do it. We didn't necessarily need a loan. We needed to do those things, and it was a bunch of free money that really allowed us to be able to compete.
So I think I should have explained myself better. The use of what those funds were going
Oh,
for, right?
absolutely.
So, okay. Yeah. So I think we asked this question a couple of weeks ago, and the response was, put it into working capital, right? If you get an EIDL loan for $50,000, $75,000, $100,000, put it into working capital. Then the question arose was, well, I don't really need it right now, but I still have it. What should I be doing with it? And the reaction to that was, well, first of all, good, right? That you don't need that money at this point in time. But then the other answer was exactly what you said. Okay, where should I double down on growth coming out of this?
Mm-hmm. Oh, absolutely. John, one of the things that we realized was that, we got to continue to do business while this is going on. We hired a consultant to do our IT stuff. We hired a consultant to come in to take a look and reconfigure our facilities. We hired a consultant to actually, excuse me, create a front end to Great Plains where everyone in the company became a customer service rep. It was just unbelievable. So they were doing their thing while we continued to run their business, and they'd come back and say, hey, we can do this.
Okay, so this is a great jumping off point. You're talking about processes, right? Streamlining those processes.
Absolutely.
Okay, so when you look at improving, streamlining the processes that are in place, how do you go through? How do you pick out the certain ones that are going to give you the best bang for your buck?
Well, John, with the grants or without the grants?
No, I just think this is a conversation about process management.
Yeah. The way that I looked at it was I could look at the assessment of the financials and see where we had some big problems. And then I could see how bad the process was, right? I'll give you another example, right? I could see that the person that had the most power in our company was the accounts receivable person. She wrote the biggest checks, right? We had inventory up to the ceiling, right? And so I asked what I thought was a standard question. I said, how do we determine when we purchase inventory and how much we purchase inventory? What do you think the answer was, John?
I don't know.
Please don't say that in my class, but gut feeling. You don't know, I mean, gut feeling, right? This is a person that's spending $3 million a year, gut feeling. And I come in and say, well, I look at this. I said, some of this inventory is older than I am. So, I knew that if we could fix this inventory turnover thing, we could really change the outlook of our cash flow and our financials. But that was a big deal there. And I knew that was going to take some time. So that's why I say that low hanging fruit, that whole thing with the labels, I said, oh yeah, we can do this now. So you have to know where it is, right? And then you have to have a strategy. And so by the time we got turned on to grants and that kind of stuff, we were able to use that money in order to fix that problem.
You've done an activity before And some of the people on this call are Goldman Sachs 10 KSB related or tangent. So
All
uh,
right.
the uh, the laundromat, right?
Oh yeah. Yeah.
Okay. So when you look at that, the streamlining of a process with a laundromat is in the person to person communication, right? It's not on the back end of it. It's how do we handle customer service. Now, customer service on a financial statement doesn't necessarily jump out at you. Maybe it's how many times they purchase. Maybe it's the average ticket. If you talk about a restaurant going up and down, the value of that. But when you were talking, I kind of went back to, should we look at process management from driving our sales? Should we look at it from lowering our cost of goods, or should we look at it from lowering SG&A? Is there any specific way that you approach that, or is it always cost driven, or is it always profit driven?
Easy answer, John. Right? It touches every single one of those. Every single one. Look at the label. Just think about from a customer service standpoint. If you're placing an order with me and you're expecting that order to arrive in 10 days, right? Because you're utilizing just in time in your facility, right? How many times is it going to be okay that I missed my commitment to you? So when I said that the complaints started to reduce, right? And we finally started meeting our KPIs. So from a customer standpoint, that is absolutely crucial. And then just think about it again from another perspective. If in fact you don't have written processes, what I learned is that we have individuals that have institutional knowledge. They know how the process works, but they're the only one that knows how the process works. And they can't even go on vacation, right? And so somebody in a meeting said, they walk up to me and they hit me upside the head. That sounds like you. And I said, well, you're right. So I did what I asked everybody else to do. They said, how are we going to do this? I said, listen, in order to go through a process, I said, the great thing about it is you only have to do it once. So when you make a move on the computer, you click it, do a screenshot, paste it to Word, and just say what it is you did. And next thing you know, they're running up saying, that was easy. I said, absolutely, right? And you give a person a book, can they go through that process? You sit with them, and they go through that process as they've outlined it and done the screenshots, and it's absolutely amazing. So, so that's another thing. That's, and then when you have individuals that they're the only one that knows how to do a process, and it's in their brain, you're at risk, especially if they're in the financial area of your organization, right? When you talk about, processing from reducing costs, this situation, we were able to repurpose 3 individuals, right? We were able to increase our capacity because we found out that was a bottleneck, right? So I think that having documented processes affects each and every one of those, right? So what if this company, our customer, we aren't meeting their KPIs, they decided to build another facility, and guess what? They end up not taking us along with us. Hey, you can't perform, with what we got, what we have. We can't afford for you not to perform in another facility for us. So those are the things that, even I could sit down after the books were, that was kind of the litmus test. Could I do it, right? And go through and say, man, this makes sense. So it was, it's absolutely essential. And then once you write those things down, you say, wait a minute, why are we doing this like that? we could, in incorporating those individuals that do it every day to talk about this process, I mean, they were surprised. I wasn't necessarily surprised how they could add value and say, listen, if we didn't do this, this, and this would be a lot easier. I said, well, why don't you do it? Well, no one said we could do it. Right. So, those things, and that's how you become a lot more efficient at what it is you do. And now you've positioned yourself to be able to scale the organization when we come out of this thing.
Okay, so I think this is the last question that I have on the books for today, and it's going to be very open-ended, and so I'm going to apologize in advance for that.
Should I let somebody else answer it?
Anybody can speak up, right? That's the beauty of this.
So John's trying to trick me here.
So you talk about risks in that last answer, right? And you talked about it from the standpoint of institutional knowledge, what happens if that one person has an accident, retires, whatever it might be, gets laid off. You talk about the lack of having trusted processes in place as a risk. As you look at July 31st right now to, let's just say, March 1st of next year, if we're treading water, if we're putting things in place to be able to grow in 2021, what are some of the other risks that we should be paying attention to at this point in time?
I would say, looking at your business and not attempting to understand how you may be able to pivot to some other things that you may not have necessarily done before, but it's very similar, and you could actually add that, and where you can, actually grow wider with your offerings, your product or service offerings. So I think that if you don't look at diversification, this thing actually may end up leaving you behind, right? And I kind of learned that the hard way, right? Because we actually had two products. We were in different divisions. We had one product where our competitors had a plethora of products that they could put, in those aisles. And so when they lost our business, they were still relevant because they had other products that, was still there that could be put there. And then we started thinking about that. See, because now we had the trust of our customers. We needed to be able to leverage that trust. And we were a small business, we were a minority business, and we were delivering, right? We were getting all kinds of awards, and that just didn't come to mind quick enough, even though, and I say quick enough, but our success actually convinced my board to sell. And when I say, they wanted, our competitors were 10 times our size, and they could not believe that we were winning, and they wanted to find out. And I say not quick enough because we could have had a whole lot more up under our umbrella to be able to offer that transaction if, in fact, the board still wanted to put on that path. So I think diversification is big at this point. And those customers that you are now engaged with and who trust you, believe in you, having that conversation, we're looking at adding these products and services. Would that be something that you all would be interested in? Could we depend upon you to support us in that particular area? I tell you, a lot of people don't understand that person sitting across the table from you, number one, they've got to trust you. You got to be able to trust to put, right? whenever I go into a sales situation, you know, I had to convince that person sitting across the table that they could invest $10 million of their revenue in our hands, right? And so once you get over that hurdle, it's a lot easier for you to go back and say, hey, because what you have to understand is your success is their success. They don't want to choose. They don't want to choose you as a partner and then you not be successful. That is just not a good look for them either. So once you get over that hurdle and they trust you, boom, you can have a conversation with them. You know, can you trust us? So that's kind of John, what I would say about that as we, as we come out, you gotta, use this time wisely, right? Look at areas where you're inefficient. You need to become efficient, and you need to make sure that it can scale. And then what are some of the other things that you might be able to offer your existing customers now in order to, to leverage that relationship?
Kim, did you have something?
Well, I was just thinking in terms of the labor market, because there's been so much churning. I know there were certain industries that were struggling to find qualified employees, especially manufacturing and tooling, tool and die and things like that, even before COVID hit. Now people have been laid off. Some people have benefited from being laid off because of the generosity of our government. So they don't have an incentive to go back to work. Some people may have found other jobs. I'm wondering, Roger, your thoughts around the risk of being able to scale up. If growth is one of the goals, you may struggle just to get back to where you were before you can even consider growth. So that's the question that I was thinking about. What does that risk look like?
Okay,
How
sure. Kim,
did I stump you? I'm sorry.
No, absolutely not. I'm sticking because it's a great question. It's absolutely a great question. The only pushback that I would give you is that labor market thing existed way before COVID, and it's one of the things that has been a challenge for quite some time. And I think that, and again, I don't think that there's a guarantee for any of this. I would say from a couple of standpoints, that was always a challenge for us, right? Always a challenge for us. But some of the things that we did, I think that was just out of necessity. We automated much more. And, I talked to you about that relationship with the chamber that I had. We also had a manufacturing group. So the major manufacturers in Central Arkansas, we had a group to talk about these types of things. And so we were trying to kind of understand what everyone was seeing, what employees wanted, what they appreciated. And then there were some things that, we said, man, this is kind of tough. I mean, it's like the best example that I could give you was from this pipe manufacturing company. And he says, we identified a young man, we're going to move him up to management and all that. But we had a problem. He was only coming to work 4 days a week. So he says, I had him bring him into my office. So this is the president of the company. And he asked the young man, he says, why is it everybody thinks so highly of you? Very skilled, people like you, you get along. He said, but you're only coming to work 4 days a week. He said, well, I can only live off 4 days a week pay.
Wow.
And, you just sit back and you just say, man, you gotta be kidding me. So, I mean, those types of things, I think you have to make it fun for people to come into work. You have to make it competitive. It's not, I don't think that there is a panacea. right? For example, we paid for our employees' insurance. And I'm talking about these are folks down on the front line. No, it never had that before. And we still had a lot of turnover. And so depending upon what it is, right? And then what we tried to do was figure out ways in which to move hurdles so that they could get to work, things like that. So if you had 3 people carpooling and the person that drives car went down, now you got 3 people out.
Yeah.
And so, that's when we work with the chamber and the bus service in order to, shuttle people back and forth. But so I don't think that there's a guarantee on that. But I think that if you make for a fun environment, people will show up and say, hey, this is the best thing I got to do for 8 hours. That's why I come to work.
It still goes back to the culture, doesn't it?
That's right. That's right.
That's a huge piece of it. And I think an awful lot of employers don't get that, or it's just not top of mind. So
yeah,
I think, and especially when we've got younger folks coming into the workforce, they are very motivated by culture, and they are not concerned about finding another job. That doesn't bother them at all. So anyway, I don't want to steal the conversation. I know we're getting close to wrap up time.
Hey,
anyway,
I appreciate it.
I look forward to seeing you, because I didn't get to see you in the Columbus cohort or the Cincinnati cohort. So because of all the different things that were going on, so I never got to see your session. You're mine.
Oh, is that right?
Yeah.
Oh, okay.
We only sat next to each other as wallpaper. That's all we've done so far. Anyway.
Okay.
Yeah.
Well, I wanted to wrap up that conversation on culture, but also tie it back into what we've discussed today. And whether you want to pin our conversation today on productivity, whether you wanted to pin it on efficiency or profitability, I think that culture can still have a process to it as well. We know companies that take 6 months to make a hire, and it's because they have several rounds of interviews. Now, the interviews may not actually be formal, right? It may be something where they're coming in to meet teams. It could be some job rotation. It could be an after hours to see how people mesh inside of an existing culture. We've also had companies that I spoke to a small business today that as of 1 hour from now is closing on its best month that they've ever had. Probably a 200% increase over their previous sales marks. And when you look at that comes with its own problems. And Roger already identified some of those. But it's, okay, we have 1 crew of people, 2 crews of people working. Now we need 4. Yeah. And where are we going to get those 2 additional crews to come in to do that work at a moment's notice? Insurance probably is not a concern at this point in time. They just want a paycheck. But you still have to maintain customer service, and you have to maintain quality, and you still have to add value into it. And so that's when process and culture and profitability all come together and meet. And Roger, I greatly appreciate your time today. I told you that this was going to feel like a conversation. I think we achieved that, don't you?
Oh yeah, absolutely.
All right, wonderful.
This reminds me of one of those sidebars in your office, or mine.
Now you know that I'm a walker and a talker, so maybe it's walking down Delaware Hall.
Right.
All right. Well, everybody have a great Friday afternoon. Have a great weekend, and I'm sure we will get together soon. So, Roger, thank you.
Great.
Kim, thank you.
You're
I know
welcome.
Stephanie was on. Have a great day and a great weekend.
All right,
Thank you.
Thanks, you too.